It's been an eventful week for cryptocurrencies and XRP. After a massive dip on Monday, most cryptos have worked to rebound for the most part, XRP included. Looks like we've made it briefly back to around $1 US, and depending on the trends and the data, we may be looking for a modest bull run, but only time will tell. One major crypto gets outlawed, and that's big news. We'll check out the technical analysis coming up in today's video, but we got a lot more to talk about. Lots more. So first, let's roll that intro. Hello and welcome to your favorite crypto news channel, MoneySide. We're glad you're here for the first time or are a returning member of the family. If you haven't, we invite you to subscribe to the channel and turn on notifications so you don't miss out on any of our daily updates. Remember, you can always let us know what you're thinking in the comment section below. We'd love to hear from you. We get started with major news from China. In a statement from the People's Bank of China, cryptocurrency-related transactions were declared illegal in what officials called a move to further prevent the risks surrounding crypto trading and to maintain national security and social stability. The news was shared on the Wall Street Journal and gave details about the move, which directly mentions Bitcoin, Ethereum, and Tether. Although the Chinese government had banned crypto exchanges from operating there several years ago, enthusiasts in China found ways to trade in the digital markets. The announcement propelled a sharp decline in Bitcoin, Ether, and Tether. According to the article, authorities in China are seeking a comprehensive monitoring system, giving local governments full play to monitor their regions and flag early warnings. It vowed to crack down on illegal financial activities related to cryptocurrencies and investigate employees of foreign cryptocurrency exchanges inside China, as well as others in the industry who continue to advertise or provide crypto-related services. This comes at a time when Beijing is looking to develop a state-backed digital currency, which would give the government their vast new tools to monitor both its economy and its people. There are other countries seeking ways to establish regulations on the crypto markets and, of course, the rise of central bank digital currencies. Bitcoin was down over 11% over the last 7 days and was down almost 2% in the last hour at press time if there was only a system in place that could be a bridge between fiat and cryptocurrencies. Now, time to take a look at a change in the strategy for one of the parties in the SEC versus Ripple case. This story comes to us from financefeeds.com and talks about an opinion recently revealed that considers comparing apples and oranges, or in this case, Ethereum and XRP. The headline reads, SEC v. Ripple, major shift in SEC strategy is admission of defeat, Attorney Hogan. A tweet from Gary Gasparino stood out to Attorney Jeremy Hogan. The tweet mentioned one of the tenets of the SEC's case against XRP hinges on the crypto being used as a security, an asset sold to help raise money to help Ripple complete the company's infrastructure. Whereas the insider familiar with the SEC's argument that Ethereum and XRP differ just because Ethereum has been built out for years, the quote about the strategy stood out. As the article says, Jeremy Hogan noticed the recent Ethereum 2.0 upgrade. Ethereum 2 is a set of upgrades that improve the scalability, security, and sustainability of Ethereum. So the upgrade just happened. Sounds like the Ethereum network is not totally built out after all, Mr. Hogan said in a video where he stated that if Gasparino's SEC source is accurate, if the SEC truly is going to try and make an argument that the difference between XRP and Ether is that the Ripple ledger is not fully built out, that is a major shift in SEC strategy and major admission of a defeat for the SEC. The article goes on to quote Hogan saying, is that the SEC is now admitting that what it has tried to avoid for most of this litigation is going to happen, that there will be a comparison between the Ethereum ledger and the XRP ledger. And that is not a place I'd want to be if I was representing the SEC because, and again, I'm not a technical person, but even I know that the XRP ledger was made, basically built out in 2013 and has been tweaked and made better since. And the Ethereum ledger was built out in 2015 and has also been tweaked and made better since, meaning there's no significant difference. So good luck to the SEC's experts in coming up with that argument. As the case continues, some see it as the SEC trying to exert its authority in an attempt to regulate, or at least to try and establish regulations on cryptos, and in particular, XRP. Regulations are coming, that is for certain. The struggle is going to be how these regulations are implemented on a relatively new and innovative system. In today's New York Times, an article examines the challenge of developing new regulations that will protect investors and not kill off the potential of stablecoins. It is a challenge, to be sure, to develop consistent regulations, and the article talks about the necessity for it. The use of stablecoins is surging rapidly, and regulators have grown increasingly concerned that they are not in fact stable and could lead to a digital era bank run. Just this year, dollar-tied stablecoins such as Tether Token, USD Coin, and Pax Dollar have jumped from $30 billion in circulation in January to about $125 billion as of mid-September. The final outcome will be interesting to see. I truly believe that regulation, sensible regulation, is a necessity going forward to ensure the validity of stablecoins and cryptocurrencies and root out corruption in the burgeoning industry. Of course, what it could do is strengthen some platforms, such as the XRP Ledger, XRP-L, which aside from its capabilities with finance and remittances, can also support issuance of stablecoins with fungible token functionality called issued currencies. Moving on, more news about the XRP Ledger. Grant money is flowing out from the XRP Ledger. Thursday, RippleX developers announced the inaugural awarding of XRP-L grants. The release from RippleX gave details about the awards that provides funding to independent developers building a variety of self-selected projects that leverage the XRP Ledger's open-source technology and further accelerate the Internet of Value. 100 applications were reviewed, and the developers from RippleX selected 25 from over 10 countries who will receive portions of nearly $2 million in grant funding. The release on Thursday explained what the recipients will be working on. Inaugural grantee projects tackle a wide range of problems and opportunities, including the development of NFTs for multiple industries: retail, art, music, sports, digital advertising, and carbon capture. Learning tools and platforms to build on and interact with the XRP Ledger, data visualization tools, payment and security solutions. The grants distributed went to groups around the world and will be structured to help open source projects built on the XRP Ledger, and particularly encouraged projects focused on the development of non-fungible tokens, NFTs. Helping to continue to build the future of the global economy is a mission of Ripple, and they are trying to do that, even though most of the current headlines continue to be locked into the ongoing trial. If you want to review the entire list of the first round of awards, you can check them out online at XRPL Grants-Wave 1 Awardees. A new round of grants will be distributed as well, and applications are currently being accepted at xrplgrants.org. So in a week of ups and downs for XRP and crypto, Ripple continues to look ahead. Interesting days are ahead, fans. Do your research and make smart decisions. Let's take a time out now to look at the technicals and see where XRP stands right now. We are looking at the Elliott wave analysis of Ripple XRP. We have a clear 5-wave advance to label wave 1. The ensuing 3-wave correction has retraced very nearly 61.8% of wave 1. The depth and form of the correction allows us to label it as wave 2. What should follow is a strong surge in buying volume as wave 3 gets underway. Wave 3 can be targeted using a Fibonacci multiple of 1.618 of waves 1 and 2. And remember, as always, trade safely, guys. I hope you enjoyed today's video. If you're new here, please subscribe and be sure to turn on notifications so you don't miss out on any of our daily crypto updates. If you have a comment or a question, feel free to drop it in the section below. Once again, remember, we're not a licensed financial advisor, and that the opinions here are presented for entertainment purposes only. Thank you as always for watching, and we'll look forward to seeing you in the next video.